$500 billion gamble. When will the AI bubble burst? Inside the world's most insane exit liquidity trap. Wait, before you scroll past, hit that like and save button. What I'm about to reveal might make you question everything you've been told about this high-tech revolution. Right now, do you feel like you'll lose your job if your company doesn't pivot to AI? Do you feel like your kids are being left behind if they aren't learning Python or prompt engineering? Watching NVIDIA's stock go parabolic and seeing ChatGPT dominate your feed, it feels like we're at the dawn of a new civilization, doesn't it? But today, as an observer just like you, I'm going to tear off that shiny gift wrapping and show you the cold, hard mathematical truth. This might not be an iPhone moment. It looks a lot more like the final champagne toast on the Titanic right before it hits the iceberg.
Drop a comment below. Is AI a God-tier masterpiece or just glorified autocomplete? Let's get into it. Chapter 1. 60 Days and 100 Million People, a blitzkrieg driven by fear. The madness all started on a mundane Wednesday, November 30, 2022. 1.1. Silicon Valley's Pearl Harbor. When ChatGPT dropped, what happened inside Google's HQ? It was a code red. Google executives watched as OpenAI, the little brother of the industry, stole the spotlight using the very same transformer models Google had researched for years but was too scared to release. In tech, the winner takes the steak. The runner-up is lucky to get the scraps. 1.2. The data frenzy. ChatGPT hit 1 million users in 5 days. It hit 100 million in 60 days. To put that in perspective, Instagram took 2.5 years. Facebook took 4.5 years. This unprecedented growth gave Wall Street a dangerous illusion. As long as the user base grows, money is just an afterthought. The floodgates of capital flew wide open. Chapter 2. Prospectors or shovel sellers, the hollowed-out entrepreneur. There's an old saying, during a gold rush, the ones making money are the ones selling shovels. In this AI rush, the man selling the shovels is Jensen Huang. 1.1. The god of chips in a leather jacket. NVIDIA's GPUs have become a harder currency than gold or oil.
The H100 chip, a seemingly harmless circuit board, has become the lifeblood of every startup on Earth. You want to train a model? Fine. Rental costs are about $3 an hour. Sounds cheap? But if you're a startup needing a cluster of 500 chips, your rent is $36,000 a day. That's $1.1 million a month just to keep the lights on. 2.2. The absurd loop. Many AI companies raise $100 million in funding, only to turn around and hand $80 million of it straight to NVIDIA. This isn't entrepreneurship, it's digital sharecropping. Behind this massive transfer of wealth is a deeply toxic ecosystem. Startups are bleeding, investors are burning cash, and only the chipmaker is counting billions. Chapter 3. Math Never Lies. Sam Altman's Financial Black Hole. Here is the biggest bombshell of this story. OpenAI's balance sheet. 3.1. Vibes-based pricing. Sam Altman admitted that the $200 a month OpenAI Pro subscription is a money loser. Why is it priced at $200? It wasn't based on a cost-benefit analysis. They simply tested two prices, $20 and $42, picked the one people complained about less, and eventually scaled up from there. This is vibe pricing. How can a $500 billion company price its flagship product based on a gut feeling? 3.2. The 10x revenue gap. By 2030, global AI infrastructure is projected to require an investment of $6.7 trillion. To justify that cost, the AI industry needs to generate $2 trillion in annual revenue. Current total revenue? Barely $200 billion. Who is going to fill that $1.8 trillion hole? Is it going to come from helping elementary students write essays and fixing minor bugs for programmers? Chapter 4. From hallucinations to lawsuits, the death of a myth. As the tide goes out, we're discovering that AI is not only expensive, it's also a bit dim. 4.1. Glue pizza and fake research. Google's AI told users to put glue on pizza to make the cheese stick, a joke that became a permanent stain on tech history. Worse are the hallucinations, AI confidently citing legal cases that never happened or medical papers that don't exist. If the core of a technology is being confidently wrong, its commercial ceiling is incredibly low. 4.2. The Copyright War. Stolen raw materials. The New York Times, Getty Images, and countless artists are currently laying siege to AI companies. AI firms call it learning. Rights holders call it plagiarism. If the law eventually mandates that AI must pay for every piece of training data, the current business model will collapse in a heartbeat. Chapter 5. Why hasn't the bubble burst yet? The game of infinite chips. Why hasn't this popped like the dot-com bubble of 2000? 5.1. The fear gambit of the giants.
In 1999, the bubble was filled with broke startups. The 2026 AI bubble is backed by Microsoft, Google, Meta, and Amazon. These companies print cash daily. They aren't investing in AI because they see immediate profit. They are investing because they are terrified of losing. If Microsoft stops, Google wins. If Google flinches, Amazon rules the cloud. 5.2. No one can leave the table. It's like a game of Texas Hold'em where every player has unlimited chips. No one dares to fold. Everyone keeps going all in. This prosperity, built entirely on FOMO, fear of missing out, is the most dangerous kind of market. Chapter 6. 3 final scripts. How do we survive? Every bubble eventually dissipates. Usually it happens in one of 3 ways. 1. The cash runs dry. When big tech's earnings reports start cratering because AI expenses are dragging down the stock price, boards will shut off the tap. 2. The Great Meltdown. A catastrophic AI data breach or a massive financial loss caused by an AI error that shakes public trust forever. 3. The reality check. When business owners realize they spent millions on AI only to see a 5% bump in administrative efficiency, they will stop renewing their subscriptions. Conclusion. Listen, we aren't witnessing a miracle. We are witnessing the largest stress test in human history.
AI technology is great, but the current valuations are insane. Don't quit your job to start an AI company blindly. Don't assume buying NVIDIA stock is a one-way ticket to early retirement. Return to common sense. Any business that doesn't make a profit survives only on hype and has astronomical operating costs, no matter how sci-fi it looks, is a dangerous game. I want to hear from you. Is AI truly going to change the world, or is it just the next shiny object designed by the capital markets to harvest us? Let's have a rational debate in the comments. No fanboying allowed. If you found this deep dive valuable, don't forget to like and follow. Your support keeps me digging for the truth behind the capital. See you in the next one.